Few key elements of long-term value creation in middle market firms, well, actually in firms of any size, cause more consternation than strategy. And the long-term success of middle market firms is predicated on both strategy development and strategy execution. In today's episode, we focus on the fundamentals of strategy development and a primary source of confusion in the process, agreeing on what exactly are goals, objectives, strategy, and tactics. How do they fit together, and what is their place in strategy development? Welcome to Right in the Middle Market, a podcast about pragmatic perspectives on running, growing, and selling your business. We talk about the challenges, decisions, and most importantly, the actions business owners can take to create long-term value in their companies. Welcome to Right in the Middle Market. This is Stephanie Chambliss-Gaffin, and today we are continuing our series on strategy development and execution for middle market companies. In our previous episode on this topic, we talked about mission and vision, what they really mean, and how they differ. In a similar vein now, we want to continue on to talk about goals, strategies, objectives, tactics. Those are all words that get thrown around, often confused, used interchangeably, but they really are different and distinct. And that's what we want to talk about today, so that as we continue to talk about strategy development and strategy execution, that we're all working with a common language and a common set of concepts. I'm joined by my co-host and my fellow managing partner here at the firm, Mark Gaffin.
Hi, good afternoon.
Mark has a great perspective on strategy development and execution. Having worked with a Tier 1 global strategy consulting firm, he has worked on client engagements truly across the globe, Australia, the United States, the United Kingdom. And so he brings a really interesting perspective down to thinking about the role of strategy in middle market companies. So, Mark, before we get into the specific elements of strategy development, tell us a little bit more, just at a high level, about some of your experiences working with clients in all those different places.
Well, I think one area that's really important, and you touched on it in, I think, the very beginning of this episode, was the importance of strategy to the long-term value creation. So one of the things we found over time, and this is global work on companies, is that really only 11%, less than that, it was 9% of companies actually earn their cost of capital over 10 years, right? So
what does that mean?
So that means a cost of capital means that you actually are paying people. You'll hear it called economic profit, but it means that you're earning enough money to pay the people that give you debt capital, their interest, and you're also providing enough return after taxes, after all the things you're paying for, to provide people that are giving you the equity capital to run your company. So it's a good measure of whether or not it's a viable entity over the long haul.
That sounds like something that we should dive into further on a future episode.
Absolutely. But it's how you would measure whether you are creating long-term value, are you providing return for everybody, because whether you're attracting growth capital or anything else, that's how people are going to view you. One of the things that we found in our study of people, the executives of companies across the globe, is really only 30%, one in three, are actually happy with the strategic process, right? Most of them, 34% felt the process itself was ineffective. 20% felt that the process results in a poor strategy design. I think we're going to talk a little bit about that today. And then really 13% feel that the results in poor execution or adoption. And that's going to fall out of some of the stuff I think we're going to talk today as to how people think they have as a strategy and why it can't be executed, because it's not really a strategy.
Well, I think if you, and as you know, I spend a lot of time working with clients around kind of that retreat and helping to facilitate some of those actual sessions that we used to do in person back in the day, where you get together and have that critical dialogue. And, I always say the eye rolls are telling. So if you think about, if somebody talks about going to a strategic planning retreat, inwardly, if not outwardly, very often you're going to see the eye roll, right? And why is that? Hopefully it's not that they don't like their coworkers. Yes, it's always a little bit annoying to try to figure out how to take a couple of days away and, break away from everything else going on personally and professionally. But I think more often it's what you were just talking about, which is that people feel like I'm going to go take, or in the worst case scenario, they feel like I'm going to go take, a day, 2 days away from everything else. We're going to have these conversations and nothing is really going to change. We're going to walk out and we're going to have a whole list of goals. And in the end, I still, worst case scenario, it still doesn't actually result in real change for the company. I think one of the reasons for this is, quite frankly, it's pretty easy to come up with goals. It's easy to come up with a very long list of goals. And if anything, you see people arguing about what the measure should be and what the time frame should be. Are we going to try to get to 30% market share in 5 years or 50% market share in 3 years? But the hardest part is really starting to narrow it down, actually prioritizing, which automatically means if you're really going to prioritize something, you are deprioritizing something else. And then set these up in a way that we all agree not only on the goal, but start to think about this, how are we going to get there? And that we leave that retreat, that forum, with a common understanding of how we are going to collectively solve that problem. And one of the things, when you start to talk about goals, a lot of people ask about SMART goals, and many people are familiar with that acronym. For those that may have forgotten, it varies a little bit, but usually by SMART, people mean it is specific, measurable, achievable, relevant, and time-based. Now, if I do a quick web search on SMART goals, you come up with 807,000 results. So maybe that's a good place to start in terms of what exactly do we mean by goals?
Well, I think that, going back to your comment on the strategy retreat and why, coming up with a whole list of goals is both easy, but then you can also then set yourself up for failure. If people feel like they've actually put the time in to come up with a bunch of goals, they believe that is a strategy, and there's a big gap there towards execution. And I think that's why you'll see the frustration that we talked about in that earlier poll. Look, I think that if goal, we could spend a lot of time trying to say, what is a goal? Let's define it for once and for all. And I don't think that's worth really the effort. If my goal is to run a 10K in 6 months, I can get an app on my Apple Watch to do that, right? It's a pretty defined thing. already did the time bound, and now it's just a matter of trying to incrementally getting me to do different things to build up endurance and I guess pain management. I don't run, so I think it probably hurts. But I think that what happens with the goals for a company, right, which is something that's in theory a forever entity, right? You want to be running this for a long period of time. You need to create goals all the time that are relatively short term, medium term, and long term. And then people ask, hey, do those come top down or are they bottom up? And the answer is yes, right? Because they are both. And I think that we'll talk about the goals that need to be consistent with, and this is where I've done these strategy sheets you talked about. We go out there and there's colors and streamers and jumping jacks and, color-coded Post-it notes. And you come up with all these goals. But if you actually say there's an awful lot of what, that feels good. That would all be really cool, but it's not coherent. And it's oftentimes not even aligned with the mission and vision that we talked about in the previous episode. And so if it's not aligned there, you're working on things that aren't aligned with your core mission or your core purpose. So your goal, why would you be spending time on that?
One of my favorite things to do, and if we go back to, just for those who may not have heard the prior episode or as a quick refresher, we talked about that in short form, vision is really articulating what an organization wants to become, where they want to be in the future. A mission is who they are today and what they're doing to achieve that mission at a very high level concept. So one of the things that I love to do, you put the mission and the vision up and then start to look at the goals that come about and say, if we achieved these things, if we achieve these goals, and again, one of my measures for a goal or a litmus test for a goal is you should be able to know, did you achieve it or not? You should look at that goal and it should be very clear at any point in time, we have or have not achieved that goal. And if you look at those goals collectively, to say, if we achieve all of those goals, will we be fulfilling our mission and our vision? And if the answer is no, then something is missing.
No, I think that's absolutely correct. So if they're not a stepping stone towards fulfilling that vision and mission, you question why is that on the board? Why are we investing time in that? It does. And so when I think of goals in this context, right, this is not the 10K context. This is what's the link between what are we going to do, and then how do we get there? So to me, SMART can get you in trouble here, because if you're spending an awful lot of time on these broader outcomes, which are the goals, it doesn't matter as much whether it's a year and a half or 2 years, right? It's an intermediate goal building to something. That's the important part. I want to make sure that I have goals across that continuum. I need to be working on things that if there's a goal I want that's a big, hairy, audacious goal, if you will, that's 5 years out, there's probably things that I need to break down to start relatively soon, or I'll never achieve that.
I often think of those, and I want to get your take on this, as the difference between goals and objectives. I tend, and I'll go ahead and put mine out there, I tend to think of that the goal is something that is, let's call it's 2 to 3 years, right? Maybe it's a little bit longer, maybe it's a little bit shorter, but it should be something that, maybe it's not a true BHAG, big, hairy, audacious goal, but it's something that is pretty meaty, pretty meaningful. We're probably not going to get there in a single year. And I think about an objective as something that is an interim milestone. Maybe the objective is something that is more like a 1 year time frame. Maybe it's 3 to 6 months, but they should be stepping stones towards the goal. Is that how you think about it, or do you just call them all goals?
No, I don't want to say that an objective is a goal-let, right? But it's a measurable step to that strategy, or to the goal, right? And the strategy is encompassing the objectives, and that's really what the strategy is. And I want to foreshadow that, because I want to stay on the goals and stay on objectives. I think of these as milestones, right? These are the what and the when. The strategy winds up being the how, and at the very, very lowest basis, you get tactics, which are the how today, or what do I need to do today to specifically cumulatively add towards the strategy to drive us to objectives that will ultimately achieve the goals.
Okay, I have to admit, I'm still a little bit stuck on goal-et. That's a new phrase. I hadn't heard that one before.
It's a little goal, a goal-let.
A goal-et, okay.
Sounds like a French hockey player.
Moving on. If you'd think, though, let's actually make that transition from goal to strategy. And I like to come back to say, fundamentally, what problem is it that we are trying to solve? And I'm a big believer that if you can ask the right questions, that frame the discussion in the right way, it helps get you where it is that you're trying to go. So to me, if you're starting with what problem is it that we're trying to solve, and then how are we going to solve it, that starts to be the bridge between goal and strategy.
Right. So I'm going to come back. Just bear with me for a second. I want to come through. We talk about long-term value creation. All of this is actually intertwined here. How do we stay relevant? And this means, how do we explore new markets, new products, new services? How do we keep ourselves relevant over the next 5 years, 7 years, 10 years? And that's work we're doing today, explorations we're doing today that get us in the right position to take advantage of a dynamic market, to be in a position where today in this market with a high level of uncertainty, there are companies out there that are actually making acquisitions. They're like, we had to accelerate our growth right now, because right now it's easier for us. If I wanted to expand, my Midwest company wanted to expand in the Northwestern United States, all of a sudden I can probably go buy some companies ahead of time. But because this was part of our strategy and our goal, and we've thought about, why do we want to be a national, call it footwear retailer, we know that we want to be in the northwest, and we accelerated the opportunity to get there. So it's being relevant. And I think what happens, we talk about people come up with a list of goals, and this is a frustration because I want to get to the objectives and strategy. But that frustration is that list of goals. It's growth. It's operational efficiency. It's all those kinds of things that look right. They sound right. And when you see it, you're like, gosh, that all makes sense. But they're goals, they're not a strategy. And we look back at Michael Porter started talking about this stuff back in 1996. He wrote a paper in the Harvard Business Review, and it calls What is Strategy? He called it out back then to say people are mistaking operational efficiency, lean, those kinds of things with strategy, right? It's not. If you're going to be a low-cost producer, that's your strategy. That's one thing, but it's just not an operational efficiency in and of itself as strategy.
Okay, hold that thought, and let's dive into that a little bit more as soon as we come back from a word from our sponsor. Right in the Middle Market is brought to you by the Gaffin Group, a full-service business consulting firm. The Gaffin Group works closely with middle-market companies tackling the big challenges of today's environment and capturing the value-enhancing growth opportunities of tomorrow. Too often, dogma, platitudes, or wish lists get confused with strategy. Then, it's no small wonder that execution can be muddled. The Gaffin Group principals work closely with company boards, executives, and their teams to seek pragmatic, tangible results. They provide comprehensive advisory services across strategic, financial, operational, and merger and acquisition capabilities, all framed by the fundamental belief that real strategy drives real results. The Gaffin Group is focused on delivering robust, practical insights and fact-based pragmatic solutions. Their services are designed to support their clients' profitable growth and sustainable long-term value creation. Go to gaffingroup.com to learn more about how the Gaffin Group can help you and your company. Welcome back. This is Stephanie Chambliss-Gaffin, and I'm here with my co-host Mark, and we are talking about goals, objectives, strategies, and tactics. So, Mark, you were just talking about, and I think, let me just recap for a second, that so we've talked about goals. Goals are something that is, don't necessarily let yourself get too caught up in all of the different aspects of a SMART goal, but it is something that is very clear when you've achieved it. It is a what. It is probably large enough that for a company, it's going to take them, call it a few years to be able to get there. But you were starting to talk about that relationship between the goal and the strategy. So how do you think about that, of taking a goal and translating it into a strategy, and then we'll get to objectives and tactics?
So I'm going to chicken out a little bit, and I'll actually read you a couple quotes from Richard Rummelt's Good Strategy, Bad Strategy. And he said a good strategy has coherence, and we've talked about that. Coordinating actions, policies, and resources, which you mentioned, to accomplish an important end. Many organizations, most of the times, don't have this. Instead, they have multiple goals and initiatives that symbolize progress, but no coherent approach to accomplishing that progress other than spend more and try harder. So a good strategy requires leaders who are willing and able to say no to a wide variety of actions and interests. Strategy is at least as much about what an organization does not do as about what it does. And so when you think of those goals, there almost certainly will be some kind of interdependencies, and there may actually be conflict among some of those goals, even if they were heading in the right direction. So you will have to make trade-offs. Some of them may need more. Some of those goals may have awful lot of assumptions behind them.
Okay, so if the goal is the what, the strategy, obviously there's a lot of things. So I guess this comes back to that if we think about that list of goals, you do have to look at them not just individually, but to look at them together. And then, I guess let me ask the question. So then is the strategy, do you tie that to individual goals, or does the organization have an overall strategy? How do you think about putting that together? And again, I'm going to start to push on my pragmatic brass tacks part of my personality about already. How do you actually make some of this work together?
So I think, again, if the goals are put together in such a way that they are in a coherent part, you can envelop them in a coherent strategy, that's kind of telling you that you're on the right track. if you can't develop a strategy, a broadly written strategy to encompass all those goals, then something there probably isn't fitting in, right? Because you should be on all those goals should be aligned with where you're going, but they're probably going to have different. You think of goals are going to probably have, you may have goals about developing a talented workforce, really beefing up the engineering part of your company, right? And so that's a goal that's going to involve a certain amount of people, right? You may also then have goals about geographic distribution of where you are selling your product or services, right? That's going to involve another group of people. But all of those are going to have a commonality in that they require capital. So at some level, you have to prioritize what do we do when. We can't do everything all at once. I think that was my point in the prioritization. But I think if you look at a goal, and we talked about this a little bit earlier, sometimes you can say the 5 whys, right? You keep pushing why. You sound a little bit like a 5-year-old kid, but you're pushing why are you doing that? Why that? And you actually get down to the root cause of why you're actually doing something. To me, the strategy, you can either approach it as what do you have to believe for us to accomplish that goal, or how? And if you did how 5 times, you push it down, you're actually going to say, how would I achieve that goal? What do I have to believe for that goal to be achievable? Right? Just because it's on the paper doesn't mean it's necessarily achievable. There's probably some assumptions behind that need to be tested.
All right. So if we have goals and then we have strategies, so the goals are the bigger what that we're going to do. The strategies are the how we're going to get there. Are we done?
No, I think that we go back to the objectives. And I think if anybody's seen one of those, beautiful, when it's all finished, MS project, you see the little milestones, right? Those little diamonds out there that, all of this culminates to a certain thing. And there may be an interdependency there. So you have to do all of these things. And then someone takes the ball from there forward. If that's the case, that's a really good objective, right? People are doing things, and these are tasks usually at a certain level to get that objective one. Once the objectives are won, those should accumulate to getting to that goal. But you may have a bunch of work streams in the company working on different objectives, and ultimately there's different goals up there, right? Every goal doesn't have to be exactly the same. They just need to be coherent.
So let me see if I can summarize these together. So again, we talked about the goals are the bigger what's that you're going to achieve, probably something in that 2 to 3 year time frame. Again, maybe a little shorter, maybe a little longer. Your strategy is fundamentally how you're going to get that done. Your objectives then are the interim stepping stones. They're the milestones that get you to that goal, that let you know that you're on the right track, and that you are making meaningful progress towards that larger goal, because most of us aren't good enough to set a goal that's 3 years out and just say, okay, I'll let you know, I guess in 3 years we'll look up and see if we're there, right? It's good to have some mile markers along the way. And then the tactics then should get down to things that are, tactical, right? They're pretty tangible. They're pretty direct. They are specific actions that also then can be distributed among a greater number of people. They are discrete actions that can be taken so that now we're able to leverage a broader number of people across the organization, all doing individual pieces that are going to come together towards that objective, which rolls out up to goal.
That's right. I mean, I think you get down to it that in order for you to achieve that goal, there is a project plan behind it, right? There just is. And so the milestones going up to that eventual, we got there are the objectives, and then the strategy is how do we balance different things, different objectives in such a way that we are making progress. And, people, I think one of the big frustrations is, again, we've talked about this, people make a lot of goals, bad strategy. Again, I'll go back to Richard Rummelt's book. Bad strategy is long on goals, short on policy or action. It assumes that the goals are all you need. It puts forward strategic objectives that are incoherent and sometimes totally impractical. It uses high-sounding words and phrases to hide those failings. And so that's why I think what's really frustrating to people. They put a lot of work into the goals, to coming up with even the goals. And they may be good, but you need to go through that next step and say, let's strain the goals. Are these all coherent? They're all things we should be working on now, or some of the things that should be tabled until they're tested or whatever. Okay, now these 5 things. So you think about how many goals can you really work on at any given time?
Yeah, I mean, I'm a big fan of that for an organization. Really, you should have probably 3 to 5 goals. And there are people that would argue with me all day long, but I would have the tenet that, that I fundamentally believe that if it starts to be a larger number than that, the attention of the organization, the resources of the organization are going to be too diffuse to really make meaningful progress on each one of those.
And I think that's exactly right? So if you get to the point where you're actually breaking this down to the milestones, doing that next level of thinking, we've got a goal. What do you break down to the milestones or objectives? And then you think of what are the different things? The strategy is how do we get there? What resources do we need when? And this, again, is probably multiple years of capital allocation, right? If you're developing different things, when does capital need to be there? Well, now the finance folks need to say, oh, well, if capital's needed there in November, I need to start working on that, not in October, probably a few months back. And I think that's where people get so frustrated. It's kind of exactly what you're saying. It's one of two things. There's 15 of them, right? Goals. And everybody's running around because they don't know which one's prioritized because there's a different owner for different ones. So you're just trying to placate a bunch of people. Or, it's just the goals. And we maybe talk about it twice a year, and they don't magically happen. And again, so much of this is time phasing over a number of years. And I think what's super critical now is for us to maybe put some goals out there that are really hypothesis driven. And you say, look, this is a really good goal if A, B, and C. And it may be that we need to spend a little bit more time investigating A, B, and C. So let's start that now. And 6 months from now, when we get back together, say, in this environment right now, that's not really where we need to be. We may need to back burner this and come back to it. Maybe not get rid of it. But in this environment, and there may be a number of things right now in this environment that make it not good now. It may make a lot of sense middle to later part of next year. So it's really driving down to that, evaluation, the hypothesis approach to strategy development.
Well, I think it's also one of the reasons that remaining overly adherent to the historical or traditional annual strategic planning process can be fraught with risk. Because if you say once a year, we're going to go out and gather the market data, or even, worse yet, if you think about every 3 to 5 years, we do our strategic planning process, right? I, over time, have become much more a fan of something that is kind of an evergreen, call it 18-month, where you're doing quarterly, getting together, testing those hypotheses, because there are a lot of things that you say, gosh, we can't effectively make that decision right now, because if we have been hypothesis driven, or we have an idea, but there's certain data, there's certain information that we really need that either is going to take some time to go out and test, it's going to take some time to go out and gather, or we're waiting for something to happen in the external environment to be able to identify if that's a good direction or not, or which way we should go. So I think making sure that this is something, and again, this can sound onerous if as an organization, you are taking large amounts of time and it doesn't actually translate to action, and even worse, it doesn't actually translate to impact, then the thought of spending time on a quarterly basis on your strategic plan may just sound, absolutely painful. But this is the kind of thing that you say, gosh, don't wait a year to come back to that. Be coming back to that on a regular basis.
Well, just to riff on that a little bit with the budgeting process that we use with our clients on an 18-month rolling budget, you are not people like, oh my God, it's hard enough at one time a year. But what you're doing is you're not actually redoing the entire budget process each quarter. Right. What you are doing is it's like 80-20, right? 20% of the expense items are actually driving 80% of the variation. And so what you're doing is incorporating, what you've learned in this last quarter into everything that's going out forward. And that's not too hard to do with the computational power that we have nowadays, right? You're not doing a lot of green bar. So what you do have is a budget that's informed with, that's informed by current developments, and that you have an actual tool that you can use. So the question would be, like, logically, if I really want my budget to reflect all the information I have based on what's happened in 2020 so far, what I believe is going to happen in 2021, and that may or may not prove to be the point at 12/31, I don't want to be working on a budget right now that I came up with in October of 2019. It's probably woefully inaccurate at this point, and I don't want to throw my hands up and say, forget about it, just plod through the year. It's the same thing with your strategy. You should be testing these things all the time, and it's adjacent markets, it's customer feedback, it's people on the shop floor. Who's on the front line that I can be getting information from to how do I develop all the time, new ideas, new products, new services, new geographies, new capabilities that I don't have right now. Again, my challenge to people on this is look at your P&L. How much money are you making right now for items that you had, SKUs you had, services you had, products that you had, 10 years ago? I'm betting that you'll find that it's not as high a number because you've had to adapt to the market.
So, as we get ready to wrap up our episode today, I want to do a slight twist on our pragmatic tips. And it's still in the vein of being pragmatic, but I want us to each give one thing about if somebody who's listening to this goes back, looks at their strategic plan or looks at their goals, their strategies, their objectives, what is one litmus test? We'll each give one that they could look at to say, is this document, is this set of things where it should be?
I would say internal consistency. And what I mean by that is the organization is a system, right? It's a sum of all its parts, but it's also, it's evolving all the time. So when I say internal consistency, that really means from our mission vision through our goals into what are we doing every day, our operations. Operation efficiency is a great idea. It's super important, but it's kind of table stakes. You've got to get better at what you do. So are the things we're doing on the strategy and our actions and our investments, do those all work? Are we actually taking dear capital and precious capital and spreading it like peanut butter just because that's the way we do it? Or are we saying, no, these projects are clearly strategic in a good sense, meaning they're aligned with our strategy, and that's internally consistent with my mission, vision, strategy, and my, competitive advantage. So I would say that internal consistency.
So I think mine would be that there should be enough that gives you a good sense of where you're going and a good sense of what I should be doing today. That you have to be able to have both, because that clear picture of where I'm going gives me the litmus test to test any potential action, any potential decision. That if I'm looking about making a decision for the business, I should be able to go back to those goals and strategies and say, does this advance the ball? And so it gives me those guideposts to help make good decisions in the business. And at the same time, if I only have the goal and I don't have, even if I have the goal and the strategy, but if I don't have the objectives and the tactics, then it may not be clear to me what I need to do Monday morning. What do I need to do? What actions should I be taking on a day-to-day basis? And so to me, it's having the information that guides both the bigger decisions, but also the day-to-day actions.
And I would just think, and I think in both of these things, what we're talking about too is feedback, right? You have to have a mechanism, and I think you touched on that more explicitly than I did, but you have to have an opportunity for feedback from the market as we move along to continually evaluate. There's got to be a way for you to incorporate that into the strategic process, the evaluation process. And I want to spend time in another episode on execution, because it's one thing to develop strategy, it's another to execute it. And I think that's important. What we're trying to do today was talk about that development, but make sure, to your point, it's ready to be executed. If you stop halfway, it can't be executed. And that's such a huge source of frustration.
And on that point, I'm Stephanie Chambliss-Gaffin, and you've been listening to Right in the Middle Market, a podcast about running, growing, and selling your middle market business. We'd love to hear your comments about today's episode or ideas for topics you'd most like to hear about in the future. Send us a message on LinkedIn or drop us a line at podcast@gaffingroup.com. And don't forget to subscribe to make sure that you don't miss your next episode. Until next time, be well and be creative.